Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Santacruz Silver Mining. Santacruz is traded on the TSXV under the ticker SCZ and on the OTCQB under the ticker SCZMF. And I'm joined today with the executive chairman for Santacruz Silver, Arturo Préstamo. And Arturo, it's great to get you back on the show. We last talked back in November, and we were kind of going through a big overview of all the different mines and mills and your ore feeding business. And in this one, I want to dive into some of the financial news that you put out to the market recently. One of the big news releases the company put out was on the 27th of February. And this is where you, through your wholly owned Bolivian subsidiary, completed an oversubscribed promissory note, 70 million Bolivianos, and the Bolivian market scooped this up in under 15 minutes. So these promissory notes have a 6.25% interest rate, and the maturity date on those, I believe, is early next year, February 15th, 2026. So talk to us about why you did this transaction and talk to us about the interest from local stakeholders in Bolivia.
Well, thank you so much. Thanks for having me here. It's a pleasure for me to be here with you and your great audience. Yeah, that's a very interesting promissory note program. It was issued in Bolivia with Bolivianos currency. It is a very efficient way for us to finance our working capital. So it was a no-brainer for us. More so, it was, as you well described, immediately fully subscribed at 15 minutes after markets open. And it has, as you said, a 6.5% implied interest rate, all-in interest rate. So it's a very efficient way for us to manage our treasury while you're keeping your US dollar account building. So we're happy that it was so well received. And the full program is for 140 million. So we have another similar tranche that we can at any time execute. So yeah, we're very happy with the Bolivian investment community. And it goes in line to our strategy of reaching efficiencies at every area of the company. So not only on our operations, but also in our corporate strategy and corporate initiatives. So yeah, I'm very pleased and we're grateful that it was subscribed so fast.
Yeah, Arturo, it really shows the interest in the company on the ground in Bolivia and people wanting to have a part of it. But it's also a very smart capital allocation structure where you're finding a better cost of capital, you're getting local stakeholders, but it's also enabling you to take revenues coming in from mining and advance your payments to Glencore. So you put out some other news on the 20th of March, a $10 million US initial payment to Glencore. Now, this is under the voluntary plan to exercise the acceleration option, meaning you can actually save $40 million if you accelerate the payments and get them paid off before November of this year. And that's because you picked these projects up in Bolivia from Glencore. So just walk us through the thinking here to accelerate this, get it paid off early, and save the $40 million.
That's a good point, Chad. And yes, that's our idea. We can execute the full payment today. I mean, our treasury is strong today. We can cover the full $40 million, but we want to do it in a disciplined way, in a way that will allow us to have and keep a strong treasury across the year and from here on. No? So that's why we're doing it with this approach on installment payments. These will be, as you point out, executed and concluded before November 1st. So that will allow us to execute on the option of paying the 40 million before November 1st and not going into the 80 million scheme for the next 8 years. So we feel that's the best way to do it and the most accretive way for our investors and also the most efficient way to keep building the company and getting our treasury strong full year round and from here on. No, so it was designed to achieve that idea.
Yeah, I think these are both smart plans to save the $40 million by executing the early payment here, but also not do it all in one chunk, but to do it in a disciplined way, as you outlined, up through October. And that way you've got good capital management. So you're doing good on the financial side. Let's shift over to the operation side of the business. When we talked last time, we talked about the fact that you have the one mine in Mexico, but you really have 5 mines and 3 mills in Bolivia, as well as the ore feed sourcing business, where you have all those different local operators giving you their feed, and then you're processing it there in Bolivia as another business. So you got a lot of action in Bolivia, still some positive action in Mexico. Last time we talked, we were talking Q3 numbers. You have put out on the 30th of January your Q4, 4.7 million silver equivalent ounces. That breaks down into silver, zinc, lead, and copper, all pulling together to form that 4.7 million silver equivalent ounces. What strikes me is that is so much higher than many other silver companies on a silver equivalent ounce basis, and yet your valuation is only a fraction of them. So talk to us about how the operations went, but also what a robust production profile this is for Q4 to wrap up last year.
Yes, Chad. Thanks for noting it. So yes, I mean, our operations are strong. They keep going strong. Actually, throughout this year, Q1, they keep running smoothly and strong. We are always trying to achieve efficiencies across all of our operations and also in the corporate side of the company. And this quarter, Q4, the one you referred to, was a quarter where we increased our silver production as we are reporting more silver now to the lead, where you get silver paid better by the refineries. Q1, I mean, we're walking the talk in that same idea. So we are achieving as well improvements across all of our mines today. Mexico, as you point out, is not the exception. We have arrived to level 960, which is a level that it will give us higher silver head grades and better throughput tonnage to the mill. So we expect a very strong and a good year 2025 from a production point of view. And at the same time, we'll keep walking and looking for efficiencies to make our mines more profitable. Just in that line, this year, we're going to start reporting an all-in sustained cash cost on a per mine basis. The years before, we were reporting a consolidated all-in sustained, which, as you point out, with a trading company, San Lucas. In this company, the business model is buying ore from small miners and then having a small discount to keep a margin. It's a company that always has a margin profit. But that being said, when you're buying ore at market prices and you have metals coming to increasing prices on silver and zinc, as we have seen over the last few months, your all-in sustained at San Lucas increases, right? And that was polluting, if you allow me to put it that way, your all-in sustained cost on a consolidated basis. So now we're going to be reporting on a per mine basis, and our investment community will be able to see that our mines are efficient, significantly more efficient than what the consolidated all-in sustained is today. So we'll keep working to achieve efficiencies across all of our operations and also to be reporting in a more transparent and clear basis for our investors so they can evaluate our operations better.
Yeah, Arturo, I think that makes a lot of sense because if you're doing it just on an all consolidated cost basis, there's a little bleed over from the ore feeding business versus some of the other mines. It'll be nice to see them broken out mine by mine so you can have the Zimapan mine in Mexico, for example, isolated, or you can look at your Bolivar or Porco mines, or the three mines that kind of play together in the Capala Blanco. So you have so many different mines and so many different operations. It'll be nice to see them outlined separately. And on our next call together, we'll dive into the financials in a couple of weeks, and maybe we'll dig into some of those mines and take a closer look. I guess just wrapping up here today, before we do our next call on the financials, is there anything else you want to say about the operations themselves as we've transitioned from 2024 into the first quarter of 2025? Any other key news that you want to highlight for investors listening in?
Well, I think for the time being, Chad, we'll keep walking the talk. We'll keep amortizing our payments to Glencore as we described in the news release back then. And we'll keep working in our operations, making sure that they keep delivering not only the tonnage and the ounces that they should deliver, but also that they keep improving on a cost-wise point of view, on their cost.
Yeah, well, that's all you can hope for is to keep things rolling, keep the efficiencies building, and keep the metals coming out of the ground, especially in this metals environment where you're really getting good payables. So we'll keep following along with Santacruz Silver and all the news on tap. We'll get together in a month or so, Arturo, and we'll talk financials, and we'll see how Q4 wrapped up once you have those out to the marketplace. But for those listening in, if you want to follow along with the news flow at Santacruz Silver, definitely click on the link in the show notes. Takes you right over to the company website, straight to their news section, where you can dig in a little deeper detail to some of the operations they just put out to the market in January and some of those financial news reports that we just reviewed here on this call today. Arturo, thanks for taking some time with us to give us an update here at the KE Report. And as always, looking forward to our next conversation.
Thank you for having me here, Chad, and thanks to your great audience who are listening into this interview. Thank you so much.